short S&Ps 1143. When I say S&Ps, I'm talking about the E-mini. I don't mean the big contract. 1143. Apex strategies. We're short currently, and we're looking for this gap fill here. 137, 1137 area is going to be an area that I will keep in a good eye on. Therefore, most likely will be my first profit target. Essentially, we're looking for the gap fill, and we're also looking for market to break even lower than that. That said, uh, nothing is fixed. We don't like to think like that about trading, so we need to stay flexible and monitor the market as everything unfolds. New information comes in, we may have to adjust our original parameters. However, this is first profit target. After that, we're looking for to push below the gap fill, and if we can push below the gap fill, we're looking for a break below this low. That's the plan, and therefore that's why the wide stop. We're using a wide stop, but that's just because this is a very high probability trade. Uh, I would say more than 90% that it's going to succeed. Therefore, the wide stop is just a matter of if we get a little bit of a push above just to poke about here another test. We don't want to get uh, taken out on any tests looking for stops, so we just want to stay clear of stop runners. Okay, so market is pushing down as it's moving. This is a key support area we need to break down. High volume is coming in. As you can see, the paint bars on my higher than normal volumes coming in. We want to see a burst through that area. And I notice when I took this trade, volume breadth was up around this area. This is a reversal trade. Reversal trades are going to occur when the internals uh, are showing strength, but that strength you need to also take a look at the ticks as well, and also price action itself. Understanding that is the best way I can say it. Having an understanding of price action in the context of what the internals are telling you is key, because there are times where the internals are strong but price action is in a pattern, it's in a bearish pattern, and that's when you're going to get these kind of moves, because they're reversal moves. And reversal moves, everybody is looking at internals thinking this market's bullish, they're bullish, but the professionals are shorting, and that's why you get the extreme volatility, because everybody is thinking the opposite of what the professionals are thinking. And so my point being that you need to look at internals in the context of what price is doing as well. Otherwise, you're not going to. Okay, we're getting fairly close to where I want to take some profits. Where notice that my original stop was uh, about 6K, but I'm already near 9,000. So it's not a ridiculous stop compared to what I'm looking to take as profits off the trade. Okay, and also that stop, like I said, this trade I'm 90% sure, more than 90% in fact, but I don't want to sound I don't want to sound unrealistic, so I was not going to ever let it get up to 6 and stop me out of it. But if it's just a quick spike up, I was not going to worry about that. And as you can see, this is the level I was worried about, and we broke through that as well. And now my matrix is jumping around because we're getting this extreme volatility. No matter what, we're going to take some profits here, and I'm going to pause this video just to release some of the. Okay, here we go. So we're going to take some profits here. We're going to get out 10 contracts there. So now we're short 20 contracts, and this stop is no longer needed to be up there. Now it's a matter of just writing this trade. Ideally, I'd like to see the trade, we've already filled the gap, I'd like to see this area become resistance, not support, this level here. and then we can ride the trade lower. The main point of what I was trying to get across is that we want to, whenever the volume breadth or any internal that you're looking at is very bullish, you want to also see price action bullish too. Otherwise, it's actually an oversold reading, so to speak. Price action from the morning was obviously not bullish. I mean, we did gap up, but considering what happened yesterday and what's price doing today and what it did at 10 o'clock when, what did we have at 10 o'clock? We had the ISM report coming out. That the reaction to that was not bullish. And then also look at the volume. Where's the high volume coming in? The high volume came in when we sold off. Okay, there's no high volume on the up moves that we had. So we're making lower lows, no volume on the buying side, high volume, the first reaction came out on the selling side. So when you consider all of this, then in that context, you're looking at the internals. You should read the internals in this context. Okay, so as I mentioned earlier, that we need to read the market as it's moving and make decisions and determine if we need to get out or continue to hold on to the trade. This was an unsuccessful test on high volume of the lows. We tried to push below this, we couldn't. This is the level I'm keeping an eye on, 37.74. I don't want to see us close above this area, and so far we haven't. We're going to attempt to test this low one more time, and if it fails to push below that, I will have to close the entire position. Because this is the second test, and if it fails to push below this, then that means this is going to become a high probability chances of this becoming a swing point, and therefore there's no sense in holding the trade. That means we're going to bounce back up. No sense in giving away all your profits. So this is our last chance, so to speak. As you can see, volume so far is very low, or the bar would have turned different color. And this is exactly where it tested. If it holds here, then we need to get out. So here buyers are coming in because they saw this low test. This is the key area. A break of that, I will have to get out. So far we're okay, but we'll have to watch it. Okay, high volumes, higher than normal volumes coming in. Okay, I'm about to exit my position, and just because the ticks are coiled up like this, we're gonna explode one way or another. I'm seeing a lot of support showing here. There's no sense for me to stay in. I'm getting out right. That's basically this is has a good probability of pushing lower, but that's fine. I took 7 and originally another 3. It took about 10 off of there, 10Ks off that trade, and that's fine because we're near so much support, so many different levels on all the 3 different markets that I'm watching, and I didn't want to I didn't have the patience to hold it any longer, and if it breaks, that's fine. I have no problems with that going. I won't regret it, in other words. And the reason for it is because when I start seeing this kind of price action with all these pushes down on high volume, but we're not selling off, we're not pushing low, we're just going sideways, ticks coiled up like that. Usually it's more often than not, what's going to happen is we're going to get a bounce back up, and that bounce could be violent or it could just be a little bounce, and then so I'd rather get out, take my profits, and then I could re-enter if I'd like. The day is just beginning, so there's going to be a lot more trades, and this way I can also take a break as well.